Well, it's no surprise that the Fed raised rates by 0.5%, guys. The Fed has been saying that they kind of were going towards that lower direction. And if you watch my other videos, you know that I thought that the Fed was going to continue on that type of trend by following what they said previously and going at that 50 basis points. And that's exactly what happened today. So no big surprise there, but I think there is something that we're missing here. I think there is a big elephant in the room that a lot of people aren't looking at.
I just don't understand how it got in here without me noticing.
And we're gonna discuss it here. My name is Orlando and welcome to the channel, guys. And don't forget, guys, I have a Christmas sale going on, 40% off for my real estate investing beginner course. Check it out. I will have it in the description. Also, I will have it pinned in the comment section. We got some good stuff here. It says the Federal Reserve raises interest rates by 0.5%, bringing interest rates to the highest since 2007. And this is going to knock my point home, guys. The Federal Reserve raised short-term interest rates Wednesday by 0.5% of a point and slowing down its pace of rate hikes from this summer. Now, if you guys don't know what we're talking about, the interest rates normally have been 0.75. Remember, I wanted them to go at a full point, 100 basis points, but they weren't doing that. They weren't gonna do that. Guess they weren't watching my videos.
God damn it!
But they were at 0.75%, which is still high, and they decided to go down. And the reason why they decided to go down was because inflation, if you have seen my last video, CPI numbers, which is used to measure inflation, have gone down 1 point from 7.7%. So the Fed is thinking to themselves,
what we're doing is working.
also, guys, if you don't know what's kind of going on, the Fed is actually getting a lot of pressure from banks and lobbyists and people saying,
Hey, man, you gotta slow down with the rates. You're killing our business.
a lot of banks, a lot of financial institutions do not like these big hikes, including anyone who's associated with the housing market. They do not like this, guys. Why don't they like this? It is crushing the mortgage business, guys. It is crushing the housing market. And so when you have all of these big institutions telling,
Hey, look, slow down, man. You're doing too much too fast. You're killing our business.
there may be some influence there. I don't know what you guys think, but there can be influence there.
This is serious.
And I wouldn't put it past getting that heavy influence from these businesses and these corporations telling them to slow it down.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
Okay, so what he's basically saying is that the 50 basis points that I'm going to push up rates by, it is determined by all of these reports, what other businesses, did you hear what he said?
Businesses and forecasters, as well as measures from financial markets.
He said businesses and forecasters. I mean, could that be lobbyists? Could that be banks and huge corporations? More than likely it is.
Dude!
That's how they're determining what they should do when it comes to increasing it by X amount or decreasing it by X amount. And so that's what he's basically, once again, guys, you got to read in between the lines. This is what these videos are for.
But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
So, AKA, what he is saying there is,
Hey, guys, get ready. We're going to continue to raise rates because it's working. We see inflation dropping, so we cannot stop raising rates.
that's what he's saying. We cannot get complacent and think we've won the war on inflation when we have a ridiculous amount to go. That's what he's saying. So if you listen and read between the lines, we already know that there's going to be continued rate hikes, guys. And I say this all the time, when rates go up and demand will go down, prices will go down.
No comment. But yes.
That's what we have to look forward to. The one question is the frequency of the rate hikes. Will it go to once a quarter, or will it be every other month, or will it be every month? Who knows? I don't know that. But as soon as I find out, I will report it.
My man.
There's a little hand trickery going on right here. While the White House is up here celebrating,
Oh, interest rates are going down. What we're doing is saving the regular average day American money by bringing down inflation, by raising rates, and what we're doing is correct.
they're celebrating that 1.71. You guys are seeing the FTX scandal go on. They're arresting people. They got all of this show going on. But on the backside, guys, did you guys know that we had the highest spending in November that we've had in a very, very long? Our deficit went up. So let's break this down to a very, very simple situation. The Fed is telling everyone and trying to stop people from spending money.
Awkward. So awkward.
They're trying to get you to stop spending money, but they're also spending record amounts of money themselves? What? They're telling you,
Hey, we need you guys to stop your spending. Hey, if you gotta cut back on a bunch of Christmas gifts, do that.
but we are having record-breaking Novembers when it comes to our government spending. Hey, you ain't got to take my word for it. Let's take a look at it. The federal deficit widens to a record $249 billion last month. But let's jump into the details here, guys. It says the federal government spent $501 billion, that's with a B, almost $1 trillion last month, a $28 billion increase to a record high. Now, guys, listen, you know what happened last year. Last year was pandemic time when we were spending record amounts of money. We were spending so much money because of the pandemic. So everybody was like, yeah, that makes sense. But we're going higher now.
Hold up.
We're setting a new normal. Now we're doing $501 billion last month, a $28 billion increase from a record high. While tax revenues dropped by $29 billion compared to last November, with the government collecting $252 billion. So while the Fed is continuing to do this hand playing, the shuffle, the cup shuffle, hey, look at FTX, hey, look, we're secretly spending ridiculous amounts of money, which leads to all of the things that we're trying to fight against. Inflation, job losses, tax hikes, all of those things. And we're secretly spending more and more money. And at the end of the day, I believe, like next year, we will come back around and everybody will be scratching their heads and wondering,
What? How did we get into this situation of job losses, inflation going up, and getting into a deep recession? How did we get here?
I'm going to point people back to this video where I said they're doing the magic shuffle here, making you look at one thing, and the thing we should absolutely not be doing, spending more money, breaking records in spending, that we should not be doing. Remember, we're fighting against inflation. We're doing. The point that I'm trying to knock home is, even though we're going down in inflation, this does not mean that rates will not continue to go up. The Fed has to continue, guys. Remember this. They have to continue to raise rates regardless, because inflation, what they're doing is working. So what does that mean? That means that we will continue to see rate increases, which means rates will continue to go up, which means that prices should still come down.
Yes, that's correct. That's correct.
Because this is my thing, guys. 7.1% is so far from 2%. Remember, that's what the Fed said they wanted to get to. 2% inflation. We're at 7.1. I mean, the 7.1 to 2% seem very far. It does. And I promise you guys, the 6 to 2%, or 5 to 2%, it's going to be tough. It's going to be tougher than the 8 to 6 or 8 to 5. It's going to be tough. That top half, easy. That's the foam on the cappuccino. We got to get to the real coffee. We got to get to the real cappuccino. And that portion is going to be tough.
Yeah, be prepared. Yeah, we'll be prepared.
But guys, this is the reason why looking at this information helps you guys out so much. Because once again, you have to look at the whole picture so that you know you can make the best decisions for you and your family when it comes to jumping to the housing market, when it comes to getting credit cards, when it comes to getting in your first rental property or any of that, guys. You have to know this information.